I have a question for you when it comes to my insurance policy. My specific policy on my home, it was what was called a RCV policy, but then after 1 year from a storm, it reverted to what's called an ACV policy. And I'm sure many of our viewers are probably, you have a similar policy or dealing with the same thing and don't really quite understand what that means. Can you explain that a little bit better for us?
Yeah, this is a very common thing, and I would tell just anybody watching that the smartest thing that you can do before you sign any policy that has to do with your property, and I understand home buying is stressful, so you just want to get your policy and be done with it. I've walked through that recently myself. But know your policy. Know what kind of policy it is. Learn what depreciation is. Learn what an ACV policy is. Learn what an RCV policy is. Make the best decision for yourself. Now, you may not have a choice if you're buying an older home that maybe you're buying as is. A lot of times insurance companies will only give you ACV, like an actual cash value portion for your roof.
Yeah. My background in real estate, what we know is a lot of times insurance companies will do that if they can't guarantee the age of the roof. Yeah. So if they don't have an invoice from when the last roofer did it, exactly, then they're naturally going to go to the actual cash value policy. Exactly.
So the difference between the two is RCV is replacement cost value. So it's RCV. So that actually makes your depreciation back up a little bit. 20% is what they depreciate it per year up to a certain amount of years. Now that is determined insurance policy to policy. That's different company to different company. And so
that's just kind of a rule of thumb, is the 20%.
The 20%, 22.2% sometimes. Okay. It just depends on the company. But so they depreciate it that amount of years. If it's a replacement cost value, then if your contractor invoices for the full amount of the claim, which he should, if you get everything done, which normally that's the case. I always urge everybody to, if you have a replacement policy, get everything done, pay your deductible.
Well, if your insurance company's going to pay for everything to get it replaced, why wouldn't you do that?
Yeah, because you're getting a home remodel for your deductible, which is normally 1%. Now, if you do have a 2% deductible, honestly, I would urge against that. Now, if you've got a $100,000 home, $150,000 home, it's not so bad. That's $3,000 if you're at 2%. But if you're at 2% and you've got a $450,000 house, you've got a $9,000 deductible.
Yeah, that's a big
That's steep, and so that's pretty steep, and so that makes people pretty uncomfortable. And then people start going, they get a bid, and they've got a replacement cost policy, but they're getting a bid, and that's not good at all. And we can go into that a little later. I don't want to go too far into that, but. So the difference between an RCV policy and an actual cash value policy, ACV policy, is that depreciation on an ACV policy is non-recoverable. And so I would always err to the side of pay for insurance that is going to replace the things that are broken on your house. Don't go with an ACV policy if you don't have to. A lot of rent houses, ACV policies don't really have a choice because it's not their main house, not their main dwelling, and I'm sure you can attest to that.